Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about MOELIS CO quarterly report. MOELIS & Company provides a wide range of advisory services across various industries and geographies. The company's key business areas include investment banking advisory, mergers and acquisitions, recapitalizations and restructurings, capital markets transactions, corporate finance matters, strategic advisory, private funds advisory. The company serves a diverse client base, including public multinational corporations, middle market private companies, financial sponsors, entrepreneurs, governments, sovereign wealth funds. The stable performance of MOELIS & Co.'s stock price over the past year can be attributed to several key factors. The company's strong earnings performance has been a significant contributor, with consistently beating analyst estimates and reporting robust financial results. This is evident in its third quarter 2025 earnings announcement, where it surpassed consensus estimates by $0.11 per share. Additionally, MOELIS & Co. has demonstrated a commitment to shareholder returns through consistent dividend payouts, increasing its quarterly dividend by 8% in February 2025. The company's strategic growth and expansion efforts have also played a crucial role, with key appointments and expansions in various practices and franchises. The firm's solid financial position, with $619.9 million in cash and liquid investments as of September 30, 2025, has further contributed to its stability. Furthermore, the positive industry outlook, driven by factors such as lower interest rates and potential supportive legislation, has provided a favorable backdrop for MOELIS & Co. Overall, these consistent positive factors have resulted in minimal decline of 0.06% between November 2024 and November 2025, indicating that various news and market factors contributed to a balanced performance, preventing significant changes below -1.61%. The primary drivers of revenue growth or decline are multifaceted and influenced by various market trends. Revenue growth can be attributed to several factors, including a significant increase in average fees per transaction, 30%, an expansion in the number of completed transactions, and a rise in revenues from high-value clients. Additionally, improvements in the M&A market, fueled by strong new business origination and deal activity, have contributed to revenue growth. The rapid expansion of private credit has also played a crucial role in driving revenue growth, particularly in a risk-on environment characterized by emerging trends in new technologies. Furthermore, near-record levels of capital accumulated by financial sponsors have created opportunities for advisory services, leading to increased revenue. On the other hand, revenue decline can be attributed to several factors, including delayed timing of revenues due to tariff policy announcements and government shutdowns. Declines in revenue from Europe, -10%, and rest of world, -59%, have also contributed to overall revenue decline. Decreases in advisory transaction revenues have further exacerbated this trend. Overall, the drivers of revenue growth or decline are closely tied to market trends, including M&A activity, private credit expansion, and government policies. Net income and profit margins experience significant growth. The financial summary reveals a substantial increase in net income, with a staggering 209.6% growth from 2024 to 2025. This trend is consistent across different time periods, including a 212% increase for the 3 months ended September 30, 2025, and a 211% increase for the 9 months ended September 30, 2025. Profit margins also experienced significant improvement, with operating margin increasing from 5.7% in Q3 2024 to 13.6% in Q3 2025, and net income margin rising from 7% in Q3 2024 to 16.8% in Q3 2025. The primary driver behind this growth is the gain from selling shares of MA Financial common stock and reducing ownership interest, which contributed significantly to increased net income. This strategic move has had a positive impact on the company's financial performance, resulting in improved profit margins and net income. The company is generating a significant amount of positive operating cash flow. In 2025, the net cash provided by operating activities reached $237,554, while in 2024 it was $112,144. This indicates a substantial increase in the company's ability to generate cash from its core operations, suggesting a strong financial position and potential for future growth. The company's debt level has experienced a significant increase between December 31, 2024 and September 30, 2025. The debt level rose from $147.9 million to $338.3 million, indicating a substantial growth in financial obligations. However, the interest expenses are likely minimal or non-existent due to the company's financing structure. Management is optimistic about the company's outlook, citing a strong balance sheet with zero debt as a key advantage in navigating dynamic markets. They believe growth will be driven by private credit expansion and improving M&A activity. The strategy involves expanding relationships with existing clients, adding new ones, and providing advisory services on mergers and acquisitions to drive revenue growth through higher fees per transaction and increased transactions. The company has demonstrated its commitment to returning value to shareholders through two key initiatives. Firstly, it has paid dividends to investors, as evident from the financial summaries on pages 21 and 32. This indicates that the company is generating sufficient profits to distribute a portion of them back to its owners. Furthermore, the company has also engaged in share buybacks, another common practice among publicly traded companies seeking to boost shareholder value. By repurchasing shares, the company reduces the number of outstanding shares, thereby increasing earnings per share and potentially boosting stock price. The financial summaries on pages 21 and 32 confirm that this strategy is indeed being employed by the company. In summary, the company's decision to pay dividends and engage in share buybacks reflects its focus on creating value for shareholders through both cash distribution and strategic capital allocation. That concludes the financial summary for MOELIS CO. Feel free to comment below, and I will be happy to answer them when possible.